Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. Following the 9 consecutive down days, the Australian dollar is currently staging a rebound that's extending on now to challenge the level around 65.95. That could lead on to 66.45. Given the rejection from the level of 65.30, I do anticipate any return there for another round of demand and may eventually see the Australian dollar recover back towards 67 cents. As the dollar index, which measures the greenback strength against a basket of 6 major currencies, was flat on Friday at 104.30. A favourable inflation data increase did improve the mood on Friday after the US Commerce Department reported the PCE price index, which is the Fed's preferred inflation, rose by 0.1% last month after remaining unchanged in May, matching expectations, while over the past 12 months the index increased by 2.5%, aligning with forecasts following a 2.6 rise in May. This data sets the stage for the US Federal Reserve's next move at this week's FOMC meeting. While many anticipate the Fed will begin cutting rates in September, some expect a rate cut as early as this week. The US Central Bank has kept borrowing costs at a 23-year high of 5.25 to 5.5 since July 2023. This week's other economic data will focus on the Australian inflation figures, so do keep an eye there. Along with that, with the US job data, which is the non-farm payrolls. So we do have a big week of data. Moving on to the euro, the market is finding momentum since finding support around 108.35, and from there looks towards the region of 108.70 and may extend on to 109 or even up to 110, which is the preferred target. From there, we need to reassess in case we find profit taking. Any pullback should find support still around that 108.35 level. Moving on to dollar yen, the market's lacked follow through, as we can see here from this bullish hammer, or some view it as a dragonfly doji. Nevertheless, we do need confirmation to support this bullish candlestick. The trigger level at this stage is seen at 154.55, and if breached, could see a correction back towards 157.5. But while that level's intact, the downside is still favourable, and therefore look into the region of 150.5 and reassess. The British pound holds steady as the bears encountered support late Friday, while the US dollar index was flat at 104.30. Looking ahead to this week, with Super Thursday on the horizon, attention will be on the Bank of England, which is expected to announce a 25 base point rate cut from 5.25% to 5%. Meanwhile, the Fed's July rate decision could be a surprise, as I mentioned earlier, but still keep an eye on it just in case we see no change in rates. So turning to the technicals, they have rebounded, and from the level around 127.45 to about 128 should continue to find demand, and they're currently looking for a rise up towards 129.15 to 129.60-65. In the broader aspect though, I still believe the market has potential to reach 130 or even up towards 131 figure 50. After much hesitation towards the end of the week, there was no hesitation on Friday nor on Monday's opening, as the market surges in front of that trend line, which is seen roughly around 2,340 to 50 area, and now tackles the level of 2,400. Now we get a close above 2,400 figure 4 in New York. That would reinstate the upside towards the region of 2,434 to 36. That said, still wait for the confirmation to support the bullish call. Otherwise, we could see the market pull back to 2,382 to 84. And given the high volatility, traders should closely monitor signals and adjust their risk management strategies accordingly, as given the high economic data risk, the market's going to be likely whipsawed right across the board. Wrapping up with oil, we can see the market after plummeting has rebounded slightly, but still a little bit mixed. But there is bullish divergence here that makes me a little bit cautious to any downside move presently, and we could see a rise up towards 77.60 or around 78.5, where I've outlined here. Getting a rejection from there, could see a move back to the bottom side of its range, seeing somewhere around 73, 70, 85. Overall though, with a bullish divergence there, I do anticipate the move to the top side for the start of this week before any pullback. Well, that's a wrap. Thank you for joining me, and as always, look out for the intraday report, and I hope you enjoy the great start to the new week.